Hello everyone, today is the 9th of April 2025 and this is the Just Dario Daily. The title of today's daily is Tariff Wars, the Empire Strikes Back. I woke up and the first headline I saw about what happened in the US during my sleep was, we just increased tariff on China to 104% from President Trump. Once again, many people were caught by surprise, even though the US president had previously warned it would take this move if China decided to antagonize rather than accommodate its requests. This is what I said yesterday in Tariff Wars, A New Hope. Unlike Japan and the EU, China can instead negotiate from a position of strength. While Chinese export to the US only account for 3% of China's GDP, US direct imports from China account for 13.4% of total US imports. Furthermore, there is an indirect dependence on countries like Mexico and Vietnam, which themselves source on average 30% of their inputs to manufacture finished goods then exported to the US from those countries. Additionally, the US biggest company by market capitalization, Apple, has most of its supply chain physically in China, and China also accounts for almost 20% of Apple's total revenues. As I've mentioned many times, the Chinese government plans well in advance for various scenarios to make the best decisions in every situation, aiming to ultimately achieve their long-term economic goals that are set, renewed, roughly every 5 years. Do you think China doesn't realize that, as I tried to warn everyone yesterday, the current situation will bring greater damage to the US economy rather than the Chinese one? Consequently, why would they sit at a negotiating table with the US right now when simply waiting will shift more and more negotiating power to China's side? Unlike Japan and the EU, who clearly learned nothing from Trump's first term, China has effectively positioned itself to use its opponent's greater strengths against them, turning the odds in their favor by applying Kung Fu principle to the global economics. Furthermore, China knows a global banking crisis is on the horizon and has started preparing its banking system and financial markets well in advance to withstand it. As I wrote long ago in the article, a big bank is on life support. China knows it and is preparing to withstand the shock. Considering the US administration's target is to significantly reduce trade deficits with other countries, cut the government deficit, and reindustrialize the country. A more effective approach would be directly targeting specific companies that have greatly exploited the US economic system, like Apple. The company run by Tim Cook has spent more than $500 billion on stock buybacks in recent years, a huge amount it could afford thanks to its perfect system of extracting the highest possible amount, mainly from US consumers, while paying the lowest possible amount of profit taxes back to its country. Only a fraction of those hundreds of billions of dollars was needed to build factories to manufacture iPhone meant for the US domestic market, directly in the US. However, companies like Apple have been allowed to expand their profit margin to the extreme for the benefit of a few at the expense of everyone else. Semiconductors, cars, widgets, and anything you can think of can be manufactured by companies in the US without any problem, as long as those companies accept that they will make significantly lower profit in the future due to higher costs. Given a market that is so focused on short-term stock performance and ever-rising share prices, a huge shift in mindset is needed for the benefit of the economy as a whole. This is something China understood very well, which is why the profit margin of Chinese companies are significantly lower than those of companies in other countries. In China, the government simply prevented companies from exploiting consumers and extracting value from many for the benefit of few. It has also stopped companies from inflating their share prices and financial assets as a whole because it clearly took away capital that could be invested more sustainably and productively in the real economy. Why can't the US do the same thing? Sure, it can. But the price to pay will be stock prices and valuation multiples crashing back to earth, something that has happened in the Chinese market since 2022. And stocks are now pricing at more long-term sustainable levels, better aligned with the fundamentals of the real economy. As I'm writing this article right now, Chinese stocks are roughly flat, despite the new action of the US government. Hopefully, it is now clear why. Thanks a lot for listening to my article. Again, today, for subscribing to the channel, liking and comment, and following and supporting me on X, and reading my articles on the blog. I wish all of you a very nice day.